Now, what is ESG? Environmental, social, and governance. Now, these are three important pillars of what is going to be the future of business. Companies are going to look at these three important factors when they're going to invest in a new business. The governments are going to fulfill certain criteria and eligibilities for business owners to come up with new ventures. So what is ESG? ESG is a combination of three important factors: environment, social, and governance. Now, the environmental criteria addresses the company's operational environmental impact and the environmental stewardship. Social criteria refers to how a company manages relationship and how it creates value for the stakeholders. The government criteria refers to the company's leadership and management, its philosophy, the practices the company follows, the policies, the internal controls, and shareholder rights. So basically, ESG is a framework which is used to assess how a company is managing risk and opportunities that are shifting the market and non-market conditions. For example, the impact of a new company on three: environmental, social, and economic system is about the ability to create and sustain long-term value in rapidly changing world. So if something has to sustain, it has to be based on these three important factors. So it's not only about economy, now it's about environment and the social aspect. So these two important aspects have been added on top of the economic aspect which was already looked into. So there is no universal categorization of ESG. However, it can be defined in different ways depending upon the kind of industry, the characteristics of the industry, and the business model it is going to follow. So if we talk about ESG and the social aspect majorly covers the practices which the company is going to follow when it comes to hiring new people, engaging with the community, the kind of efforts the company is making to do good work for the community, how it is going to procure their goods and services. So this is the aspect of the social angle. Now let's talk about the governance issue. A more diverse, broad-based type of culture helps the companies to make informed decisions. It supports the acquisition of new customers and markets. This is the governance aspect. So you as a person must be able to break down the issues, the problems, and assess how they are going to impact the performance and the profitability of the company in the future. So let's talk about the historical background of ESG. Well, it is often used interchangeably with corporate social responsibility, which we already know. In 1980s, environmental health and safety was the important criteria based on the development in environment and employee regulation. In 1990s, the buzzword was sustainability, which focused on reducing environmental impacts beyond legal requirement. From 2000 to 2010, corporate social responsibility, how much the corporates are going to take, or the philanthropy work which they are going to do in order to address social issues. Now beyond 2020, it is ESG, environmental, social, and governance. It's a holistic concept related to competitive advantage and risk and reward management. So if we talk about the three key factors in ESG growth, it is the transparency. How transparent you can make the investment in a company, the kind of regulations, both national and international, which will help the companies to flourish if they want to try out new activities. And the third is materiality, that is the influence on the risk and returns. This eventually is going to lead the path towards growth. For example, if we talk about the impact the social responsible investing is going to have in the future, you can see that all the big companies which are there in the market, once they bring out their annual report, they focus on the green initiatives which they have taken. They focused on the amount of solar energy they have capitalized, or the amount of investment they are going to make in the future, convert the entire electricity production into green energy, right? So You must have heard about impact investing, green bonds, etc. So, what is the importance of ESG? Now, ESG has a significant positive impact on the fundamental business issues, and it also helps them to get or have long term success across all industries. The first is the repetition. If a company is following the model of ESG, it can enhance its repetition and get licensed to operate in different verticals and in different regions. You must have heard that Facebook has lost so much of money because of its bad reputation when it comes to privacy and data security, especially after the cybersecurity attacks. So the corporate reputation is very, very important. The second aspect is the reduction in the risk. Now, once you follow the ESG model, it will help you identify the immediate and the long-term risk. That is how a company is going to sustain itself. For example, a food production company may be dependent upon the local labor force to produce and distribute their products, which is again dependent upon certain natural disasters. Let's suppose tomorrow there is flood, so the local labor will not be able to attend the work, and hence the company may have the risk of not working on that particular day. So once you follow this model, you are able to identify the risk. Another important aspect is the opportunity management. Now, what do you mean by opportunity management? Now, once you shift the market and non-market conditions, it can expose the products and services to unserved customers and hence build more strategic relationship with people. So once you follow ESG principle, you'll have new opportunities of targeting new customers. Also, it is going to add the cultural and intrinsic value to your product and business. The people are going to be more committed towards building a high performing, purpose driven organization with an inclusive culture. So integrating ESG factors can add a lot of valuation not only to your company's profile in terms of finance, but also intangible factors such as culture, talent, recruitment, excellence in the work, and the investment outcomes. So ESG is very, very important because it is going to improve the corporate reputation. It is going to reduce the risk. It is going to create more opportunities and bring cultural and intrinsic value in your company.